It's 1 p.m. Time to do business right here on Business Incorporated. And here's what we have prepared for you today. In Zambia, the copper output has gone up 11%. That's the record for 2024. Making the most of opportunities, Egypt has resumed fish export to European Union, and that's after 3 years of halt. Tourism is still big business for Kenya. In 2024, they recorded 2.4 million tourists. Welcome to the program. I'm Ini John Mekwa. Let's do Friday business. Right here we start as usual from the global space to tell you metals, what's going on right there. Gold prices remain steady on Friday, on track for their 8th straight weekly gain, supported by safe haven inflows on concerns over United States President's tariff threat. That's still a threat. So we see the numbers for now. Spot gold is unchanged at $2,940.32. US gold is also unchanged at this time. Spot silver is, however, down 0.3%. This is a different picture from what we had this time yesterday. Platinum is also down 0.4% at $974.58. Palladium is down, and well, the reasons are not far-fetched. US Federal Reserve officials are taking note of what they see as rising inflationary pressure. Remember, we did see US inflation numbers and we saw it higher than expected. And immigration and all of other policies, as well as Trump trade tariff, these seem to be feeding on inflationary pressures. And so that's why the US Reserve is being very cautious, and it seems investors too have also adopted that stance. And then moving over now to what's going on in the global oil space, prices edged down on Friday, but are still poised for a weekly rise on concerns of supply disruption in Russia and improving outlook for demand in the United States and China. So it's down 0.27%. For Brent, $76.27 a barrel, down more than what we had in the morning. For WTI, 0.3% at this time at $72.26. And I mean, the drivers are still the same since it's the global space. Market focusing on oil supply disruption. Russia has said that its Caspian Pipeline Consortium oil flows, that's a major route for crude export for Kazakhstan, were reduced by about 30%, between 30 and 40%, and that started on Tuesday. And then we come home to Nigeria and see what's happening. First of all, we go to the FITC insurance industry. That seems to be gaining some traction in Nigeria. And now we see that FITC has also presented a CEO's report, and they seem optimistic about the industry for the year 2025. The insurance industry has been in the news in recent times, from the renewed commitment to enforce the third-party policy for vehicle owners to the Committee of the House of Representatives considering comprehensive reform of the sector. Building on this, the Financial Institutions Training Center, FITC, has created a forum to empower stakeholders with more information to meet up with existing and emerging demand through its industry report.
This report underscores the critical role of leadership and collaboration. And collaboration in the sense that Financial Institution Training Center, as you are aware, is a heritage organization that is set up to provide the entire players within the financial service sector with knowledge solutions that will advance the practices and the operators and all of the interventions that they make within the market space. Oftentimes, there is a divide with insurers between the operators as well as the regulators and the consumers. Many leverage insurance for when it is compulsory and mandatory. For a third party, for vehicle owners, people are thinking, oh, I do not want police to catch me, so they get their insurance done, so they get out of trouble. But it's much more than that. Insurance gives you safety, and that's the reason why it's important.
While the report highlights growth over the years, it also advocates more adoption of technology.
To bridge the identified gaps, we must adopt technological innovations such as InsurTech and RegTech, which have enabled top-performing insurance markets to optimize their operations, enhance customer experience, and unlock advanced analytics. NICON's strategic plan prioritizes strengthening regulatory framework and driving digital transformation.
The report captures the optimism of chief executives in the industry, but highlights areas lacking progress, such as customer education as well as technology. It calls for upskilling initiatives and aligning regulations with industry needs for sustained growth. Communications Commission is making good its promise to increase technology adoption through Universal Service Provision Fund. Its latest effort is a new information and communication technology project in Ogun State Institute of Technology, IPESA, in Ogun State. The project, named Emerging Technologies Center, sited on the Institute's campus, is aimed at enhancing learning experience of students while providing a platform for digital innovation, research and development for the overall economic growth of Nigeria. The event was also an opportunity to sign a memorandum of understanding that's aimed at ensuring effective utilization and sustainability of the ICT project in the Institute.
The Emerging Technology Center, the ETC, is a significant milestone in the USPF efforts to bridge the digital divide and promote digital inclusion in Nigeria. The ETC is equipped with 100 desktop computers, emerging technology applications, bandwidth and connectivity tools, which will provide students and faculty members with access to cutting-edge technology and resources. The ETC will not only enhance the learning experience of students, but also provides platform for innovation, research and development, which we have all now seen with even the expression of the rector and from our preliminary checks here and there, trying to know what is happening in Ogitech. We've seen quite a lot of that. We expect this project to have a significant impact on the institution and the wider community.
With $600 million as daily inflows into Nigeria's foreign reserve, the Central Bank of Nigeria says it is confident of a sustained positive sentiment around the naira. The acting director of Monetary Policy Department of the CBN, Dr. Ladi Balakefi, was a guest on Business Morning, says this is the reason for a hold position which the Monetary Policy Committee took at the February meeting.
As at end January, the reserve stood at 38.71 billion. And last year we got up to over 40 billion. And a monthly average of inflows has not been less than 600 million. So this shows you that there's a sustainability trajectory in that space. In addition to what I mentioned earlier, the measures that the bank has put in place, such as the B-match system, which I had mentioned earlier, which was introduced largely to bring governance, compliance, governance, credibility, ethics, and transparency into the foreign exchange market, as well as the Nigerian Foreign Exchange Code. These are international best practices, which once investors see that you have these things in place, it attracts them to your economy. And trust me, in the central bank, these things are adhered to strictly, and Governor Olayemi Cardoso has made pronouncements that should any bank default or be seen to be going back to the old ways, that they would be addressed immediately.
So still on that MPC decision from yesterday, also during Business Morning, had a conversation with the GCEO of Cowries Investment Company, and he talked about the possible impact of that hold stance in the market and investor sentiment.
We saw a Treasury bills auction on Wednesday, the 19th of February, with a stop rate for the 364-day bill at 18.43%. That's a material decline from the region of 22.8% we saw in November last year. Even this year, we've seen about 20% auction stop rate. And we also saw a decline in all the tenor buckets. The 91-day bill had a stop rate of 17%, and then the 182-day bill had a stop rate of 18%. These are instruments. That 182-day instrument had been maintained a stop rate of about 18.5% for quite some time. So over 50 basis point cutoff from that stop rate. So we've seen the central bank now borrowing at a reduced interest rate. But if what I had mentioned earlier, the reserve begin to come under pressure because of lower crude production or lower crude prices, then the central bank, for it to sustain naira appreciation and naira stability, will have to offer these bills at much higher rate to sustain the interest of foreign portfolio investors.
All right, so even though we could be celebrating positive interest rate, I mean, having a reduction in inflation that could lead to a reduction in interest rate, could lead to a reduction in FPI, that's foreign portfolio investment. But we'll see what happens in the coming days. Now, one of the reasons, according to Governor Olaimika Doso, why the MPC chose a hold stand is because there's been stability in the price of petroleum products, which we know energy, transportation are major contributors to inflation number in Nigeria and other parts of the world. So let's find out if we are really in a safe place when we talk about the pricing and supply of petroleum products in Nigeria. We have energy experts right here in the studio, Dr. Wisdom Enang. Dr. Enang, good afternoon.
Hi, good afternoon, Nini. Thank you very much.
So I won't take you through the MPC. I know you are oil and gas man, but I mean, one of the reasons why the meeting say they took the stance that they're taking was there's been a bit of stability in the oil and gas sector. We've seen the price of diesel, taper a bit.
Yeah.
Then we've also seen petrol after the Christmas gifts, and then the competition factor driving
Correct.
in. So would you say we're at a stable place now in the oil and gas sector in the country?
Yeah, definitely. I think we are in a stable position, but more so the outlook for the future is looking really good. And what do I mean by that? What are the factors that affect the outlook? The first is as it affects PMS, for example, and other refined products. The first is the crude oil prices. And we know that with the rumored discussion of peace treaty between Russia and Ukraine, we can be assured that that would lift some of the sanctions already existing with Russia. If that comes through, would have a lot more liquidity globally, and then that means the prices will definitely come down.
Isn't that a negative for us?
Well, that's why I said it's a positive for the downstream sector, but a negative for our upstream earnings. So that's why I was very specific that it's good for consumers, basically. Now, the other thing is that we look at our exchange rate. That's another big factor. Exchange rate, for the first time we're seeing the power market really come down really hard. I think today I'm hearing about 1,520, which is really good. Considering the fact that it was quite high up a couple of weeks ago. So that's to show that the central bank decisions are really helpful. And as that comes down, also coupled with the fact that we're having, for example, the Dangote refinery go up in terms of the economies of scale. As you ramp up your production now at about 550,000 barrels, producing daily production of about 33,000 liters, 33 million liters, per day. That means that we are in a very good position, and the outlook is quite good. But then, for me, I'm just thinking to myself, what's the value in the import licenses at the moment? Are they for price check, or there because we need them. And if you work them out, I mean, the NMDPRS said that we currently do consume about 50 million liters of PMS daily, and the Dangote refinery is already giving about 33 million. And then, of course, just today we had an update that we have, about 10 days worth of production from the Dangote refinery that has not been, circulated in the market. So the question is, where are we headed ultimately? Are we going to be benchmarking the price domestically using that of the imported variant, or is there a real need for importation into the country to meet any shortfall?
Yeah, well, I was hoping you would say that. I mean, you've heard that with time, the issue of importing refined products will come to an end, because I think that's the hope of Nigerians.
Yeah, I mean, hypothetically, with time. But if you read that, if you say that, and then you look at the rhetoric from the NMDPRA, there is a strong indication from them that there's need to import for a shortfall. I mean, the discussion from the NMDPRA leadership shows that they envisage that the domestic refining capacity can only meet about less than 50% of our production, of our needs, of our demand. However, the Dangote refinery has also said more recently that they have about 10 days worth of production that hasn't been lifted. So they're questioning the real intent. And this is why I said, is the intent ultimately for those import licenses to be kept as a price benchmark, or is there a real need for us to import the those imported variants into the country to meet a shortfall?
I actually thought we're done with all of this politicking, and sentiments around all of this. But I guess, as you noted, perhaps it's a strategy to avoid monopoly.
Correct.
But the consumer wants to know, then what does it cost me? We're supposed to have the Port Harcourt refinery working, the Warri refinery working. There are others, I think Kaduna is supposed to come on stream and all of that. Are we going to have all of that and still keep importing into the country?
That's the big question for the future, because if you look at what happened in January, we had the Dangote refinery increase the ex-depot price from 899.50 naira to about 955, and then you had retailers go from 935 to about 970 at the time. But then you had the importers benchmarking theirs at about 922 naira, saying that they were ready to supply at 922. There was a bit of a conversation around whether the importers were happy to still stick with the Dangote, even though it was 955. And then suddenly on February 1, we had a press release from the Dangote reversing the prices and making it lower. And I think that brought down the prices. Right now, we're having MRS, they're doing at about 925. We have the NMPC, for example, now doing at about 945. And then other people are selling at about 960, 970, 980, depending on where you go. So it looks to me that there is a sort of a subtle competition going on between the import variant and the domestically produced variant. More importantly, I'm thinking in my mind, how are we going to get to a point where even the domestically produced PMS, the benefits of that reduced pricing gets to everybody? Because right now the real benefits are demonstrated by MRS. If you go to an MRS filling station, you will get 925. But if you go to anywhere else other than that, you might get 960, 970. So how do we even make sure that there is that sort of uniformity in the price benefits, especially considering that quite a number of people are lifting from the Dangote refinery?
Yeah, but do we need price uniformity? Shouldn't the consumer benefit when there's that competition? Well, and it's a deregulated market.
It's a deregulated market. But what I'm saying is, you've obviously taken from one source, right? And that's the source that is producing majorly for the country. And then I'm asking, how do we ensure that when you take from that source, the margins you put on there are, in line with the agreement? Remember, the Dangote refinery, for example, has signed a deal with MRS to say this is the kind of prices we want, and that's to make sure that those benefits are passed down, essentially to stop the situation where we have the benefits given from the manufacturer, for example, or producer, down to the middleman, and the middlemen then inflate that whole margin, and then the consumers don't have the benefit. So not like we should regulate the market, but to make sure that those benefits, which of course, as a result of the fact that the crude for naira deal that we're having at the moment, more stable macro conditions, passing that on to Nigerians and making sure that those benefits stay realistically with Nigerians.
I guess consumers will have to make the choice. You stay on the queue at FRS. But I mean, there's also something brewing in the global scene. Russia, Ukraine. We know the disruption that brought when that war started.
Correct.
And now we're hearing peace talks. At first, it seemed President Zelensky was not so, into it. But now, at least from last night, I believe he said he had positive conversation with envoy from the United States. And so if sanctions are lifted off Russia oil comes back full stream, so while the consumer will be smiling, the government, our budget funding may be threatened.
Correct, and that's true. And just to further compound the problem that you're trying to contextualize, let's look at if we now have the full effect of the United States drill, baby drill. And that's going to further compound the problem. So that's why I said that it's an opportunity cost, either which way. If you look at the fact that the government is obviously at this time, for the crude for naira deal to work, there is some opportunity costs. The government is having to go take out some of the quota that it should have made earnings from for the domestic refinery, and that would even be worsened when the crude oil prices go low. Now, what's the solution? I think the government is cognizant of that, which is why you keep hearing that we are gearing towards making 2 million barrels per day before the year runs out. At the moment, we are at about 1.538 million barrels per day, which is why the headline came out that we actually beat our OPEC quota by about 38,000 barrels per day. So that's a good positive note. It's good to know that the government is cognizant of this, and we can tell this because there's a lot of drive towards, if you've gotten the licenses, you've got to start operationalizing those licenses to get some benefits into the economy. There's also a lot of talks about bringing the key critical stakeholders at the various states where there are problems. For example, they're going to lead us to say, let's have a conversation about how we can work to end all sorts of crude oil theft. And now we're having promising numbers. We're having numbers like 5,000 barrels per day level of theft, which used to be much higher. So now we're rejoicing that the theft has gone to about 5,000 barrels per day. So there is a positive note that ultimately the government is, though reactive, right, but it's reacting quick enough to make sure that whatever happens, we're not going to take that much of a hit. As to how we're going to fund any shortfall, because we've got estimates in our budgets. We estimated the exchange rate at a certain price, 1,500, and then the cost of crude at a certain price. But ultimately, the government would have to work out two ways. Either they have to borrow, or either they have to work smartly to spend for each of the projects, realize it, but then spend less. It's left for the government, but that possibility is beginning to crystallize very quickly.
Yeah, but I hear you say that the solution is just ramp up our crude production.
Yeah, if possible. I mean, looking at all the militating factors, there has been a number of militating factors, right? And I'm glad to say that the current government has really done well when it comes to getting through the whole issue of divestments, because what people don't realize, in the years heading towards the actual pronouncement of an intent to divest, most of those companies psychologically have divested. Yeah, so say 3 years before then, they begin to slow down on the investments. They're thinking about how to just recover the oil, make a lot of money from it, and then move on. Right, and I think the government hastening that process is really crucial, because it means other companies that have other thoughts about how to optimize the production portfolios that they have in country here, cognizant of the fact that they do not have alternatives to look at globally like the other oil majors would do. That's a good one. The second thing is that we need to diversify our earnings portfolio, and it's good when you see companies like Seplat, for example, take over the mobile producing Nigeria, which is because they're actually geared towards optimizing gas portfolios. So you begin to see the potential for gas to be a very major earner for Nigeria. So that's a good thing, and I think it's very strategic. More so, I think recently we've had the rhetoric change from signature bonus to more of, put that money into production, and then we'll earn it at the back of the production that you make.
But I guess the other diversification would come the non-oil exports.
Correct.
We could also do a whole lot with that, and that could also boost the government's revenue.
And that speaks to establishing primary, secondary, and tertiary linkages to the oil sector. For example, think about what we can do with gas. We can do a lot of, we can boost the power sector. We can do a lot of manufacturing of urea, for example, which then fits into agriculture. So there are a number of things that we could do. And potentially, I mean, when you look at what gas can do, it's a huge, I mean, we're even talking about CNG. We're talking about, the transition fuel. We're even talking about supporting some of our manufacturing capabilities. So those are all things that, of course, we need to start looking at. Again, it's good that we've attained stability in the oil sector. Now the non-oil, we need to take it one step at a time from the primary to secondary and the tertiary linkages we need to start establishing.
All right, I hear you, linkages. It's just the oil and gas has to stay in the middle of it. Well, thank you so much, Dr. Wisdom Enang, for your time.
Thank you very much. Deeply appreciate it.
All right, so let's take a break now. When we come back, we'll head to the market, see what's happening there. We did hear from Mr. Johnson Chukwu about possible reactions from the fixed income market. What about the equities? We'll talk about that after the break. Stay with us. Welcome back to Watching Business Incorporated right here on Channels Television. We're in the market now where the NGX is still trading negative at intraday today. It's I think we only had one positive this week. Well, I won't give up yet. We'll see how the market closed, but for now it's down 0.15%, 108,406.63. Let's talk to Ambrose Omodion now to tell us what's going on in the market. Hi, Ambrose. Good afternoon and welcome to the program.
Thanks for having me. Good afternoon.
So what's happening? We've had too many reds this week. What's going on? Who are the drivers of this?
Yeah, for me, it's expected that the market have broken another resistant level of about 109. That what we call a separate line, which is good for the market. But pulling back is for the market to gather more strength to continue the uptrend, especially as we're entering the peak of any season on the Nigeria Stock Exchange. I believe that with the outcome of also the MPC meeting yesterday, many players in the market, both institutional investors and retail investors, are analyzing what the impact will be going to the future. Now that we have between now and May 19 and 20 for another MPC to come, this giving a rate of change and other implement in that monetary circle on change, that what was it going to do for the market. And I believe that there's a lot of positive expectation for equity space, because in the last almost 4 option of JDB, the longest window there, which is a transport, they have seen that they have been on the decline. It is a sign that now coming up with another rate on change, signaling that might see possible rate cut from May after we have seen the rebased inflation data and that of GDP. I'm likely to see that only want the economy to expand, not just attracting foreign investors alone. It's time for the policy managers and economists to start cutting rate. That also would now kind of push funds to equity space, knowing that most companies on the exchange have done well in terms of performance, and that's going to support their payout at the end of the day. That means seeing a pullback, like you just said, for me, an opportunity for investors to get into value, and that is the beauty of stock market anywhere in the world.
Okay, but this pullback, Ambrose, is taking too long. We've been pulling back. We've been pulling back since Friday. We only had one recovery this week. I mean, it's scary, We just keep taking and taking. I wonder when it will end.
No, let me shock you. When you look at market dynamics anywhere in the world, profit taking is part of market dynamics. As you are buying into stock, you have call your buy range, your profit target. And once that target, you are about to pull out your profit to get another stock. Well, now that we are seeing another factor that will provide liquidity for equity space. That's why I said the pullback for me is an opportunity for investors to buy into what? Into volume, especially those companies that have good dividend policy. I said that we're already entering the peak of earnings. That means most companies are going to announce their dividend between now and 31st of March. Bring to that stock, particularly now that we're seeing that the physical market has led to the go, the yield will start coming down now. For me, investors are looking at those companies, especially either in the banking sector, in the oil sector, in the insurance sector, we see that there's an opportunity, key in there and make money. But I believe that, like you just said, for me, the pullback is just an opportunity to buy into value. There's nothing else to say about it, because anywhere in the market, no market remain up or no market remain down. The oscillation is the beauty of stock market anytime, any day.
All right, Ambrose, I'm going to share your perspective to give me a bit of comfort at this time. But what are the stocks of interest at this time, intraday?
Yeah, for me, I see that the pullback in Aradel is a plus. We see no one going below 60, and for the pullback in one is supported to buy, especially if you want to take their bonus as a free gift. You are qualified for the one that the equipment was on February 14. Another one is coming up around June 30. But seeing that those companies are yet to release their quoted account, we see that Aradel paid in trade dividend, that was last year. Now, as an earning per share of 52 to 77 earning per share for quoted account, possibility that 30 naira will come from Aradel, pulling back to around 550 for me is a good one. And also, I think that banking stocks that are the most consistent dividend paying company on the exchange. Now, pulling back, that is that those banks are capable. I believe that the more the banks release their additional shares, we'll be able to pay good dividend, because if some a company like Access have listed at about 53 billion ordinary share, would they have up to 150 billion profit to pay dividend at 150 or at 2 naira? These are the things that investors will be looking at. Where is that opportunity to make good dividend and key to that space?
Okay, so now that we see yields declining, does it mean we can expect investors to face the stock market, the equities?
That is because in the financial market, what we call a circular flow of funds. Now that we're seeing that the yield is declining in the fixed income market, automatically for you to make good return, whether capital appreciation or yield, dividend yield, in a shorter time and is what in equity space. For example, instead of you to make like 25, 50% or 22% in yield in fixed income market, in a treasury bill, 364 days, you can make that capital appreciation in less than a month or 2 weeks in capital market if you buy into the right stock. Let me use that language. And for me, it's not to take calculated risk and invest with knowledge and with information to make money, because equity market now provide a portfolio, because companies on that platform have done well in terms of performance. I will tell you that the figure we saw on the account was mind-blowing, that most companies expect that the economic challenges and headwinds would have affected their performance. They really come out of them. That means this company are heading somewhere. That is why we analysts are saying that if by second half of this year we start seeing rate cut in Nigeria, that will also boost equity market. I mean, if you are thinking where you can create value, I think it's time to start getting toward equity space, company that has value and that has also growth potential.
All right. When do you see this profit taking ending, or at least easing a bit, for us to see the ball back in the market?
I like that, Petrol. I believe that from next week, the early filers like UCAP, Africa Prudential, Transcorp, Dangote Sugar, Dangote Cement, Boa Food, when they start filing their audited account in the market from next week, I think that also change the market sentiment, and also digesting that impact of this outcome of MPC meeting yesterday. By next week, we'll see a turnaround in the market.
All right. I guess we can endure another negative trade today until next week. Thank you so much.
Yeah, that makes it more attractive to position for next week Monday. If you put back today, better.
Okay. All right. We'll see. Thank you so much, Ambrose, for that, and have a great weekend.
Thanks for having me. Yeah.
All right, now let's look at other markets, other parts of Africa. We see South Africa is in the positive intraday, 0.05%. And at 88,921.94, building on the 88,000 level right there. And then we go to Egypt, which is closed today, but closed positive yesterday, 0.13% in the positive, 30,914. Nairobi, however, closed in the red. But notice this, we've seen Nairobi hit another high here because they had that resistance point of 132 level. So we see there at 133, even though the profit taking seems to be coming in, but at least it's a positive, positive move for that market after a bit. We move over to the Middle East to see two of those markets are closed on Friday and two of them are operational. So Dubai is not intraday, it is closed on Friday, closed negative for the week. Abu Dhabi is however positive 0.11%. Saudi Arabia, the Tadar war, we've seen telecoms and IT as well as energy and utilities and real estate stocks leading shares higher for Tadar war. That is how they're trading today. So the best performance session had this international holding group, which rose 6.33% to trade at 23.84, and Etihad Etisalat, also part of the telecoms that moved Tadar war at intraday, so 0.57%, and then Qatar. Oh, I think I mixed it. So the other markets are trading. That's Qatar, the Dubai, and Qatar, and Tadar war and Qatar are closed, but Tadar war closed in the positive, and as well as Qatar 0.08%. Apologies for that mix-up right there. So let's move over to the United States and see what's happening there. The Dow Jones is positive this afternoon, 0.07%, 44,299. S&P 500 is also positive, and NASDAQ is still retaining the positive sentiment around it in spite of the fact that China is making the most of DeepSeek. We see that in the United States, NASDAQ is also doing all of that. During regular trade yesterday at the United States, the Dow Jones shed 450.94 points. That's more than 1%. But let's join our correspondent Maria Bird for the details of Thursday's trade.
The U.S. stock market had a challenging day on Thursday, as the S&P 500 had a bit of a drop after 2 record-setting days in a row. The S&P 500 closed at 0.5% down. The Dow Jones closed at 1% down, and the heavy tech NASDAQ was also down at 0.5%. Investors watching to see if the projected tariffs could have an impact on the U.S. stock market, or if it's just a temporary dip. It is also clear that investors are watching to see what's happening with large retail giants like Walmart, as their forecasts for 2026 are showing a downward slope in retail sales. This could be something that's watched over the next few days and weeks ahead, as investors are trying to see the stabilization of the U.S. economy.
Yeah, looking for stability everywhere. Let's see Asia now. We see the Nikkei is in the green, Kospi of South Korea also green, Hang Seng looking very green, almost 4%. When last did you see a market surge this much in one trading session? Let's look at, and then we look at the other parts of Asia right there. We see the Shanghai is green, and picking particular interest in India, Nifty 50. We've seen this market struggle now for a bit. So it's not just the Nifty 50. There are other indexes also in the red. The Sensex, it declined 424 at the close of trade. So they said the factors driving it, persistent concerns over global economic conditions and foreign institutional and investor outflows. That's weighing heavily on investor sentiment in that market. Among the Nifty 50 companies, only 13 stocks advanced, 37 declined. And top gainers include Hildaco, Tata Steel, and some other vehicles in the automobile and all of that. But we hope to see a recovery in the Nifty 50 area very soon. All right, now let's see what's happening in Africa now. South Africa's president is calling for global unity as the world grapples with pressing rules like climate change, geopolitical tensions, and poverty. South African President Mr. Cyril Ramaphosa has emphasized the lack of global consensus in addressing these challenges. He was speaking at the G20 Foreign Ministers meeting in Johannesburg. He's stressing that modern-day issues require collaboration, the promotion of multilateralism, and a fair trade.
South Africa is hosting the G20 Foreign Ministers meeting. In President Cyril Ramaphosa believes the country's G20 presidency is a vital platform to spotlight Africa and the Global South's priorities on the global development agenda.
Africa is home to some of the world's fastest growing economies and in many ways faces unique challenges such as the impact of climate change, developmental needs that it has, and the effects of global trade dynamics. This summit's location underscores the need for African voices to be heard.
He, however, highlighted the lack of global consensus in tackling today's challenges.
There is a lack of consensus amongst major powers, including in the G20, on how to respond to these issues of global significance. Extreme poverty and growing inequality within and among nations weigh heavily on the conscience of the world.
Ramaphosa stressed that the G20 must align with the aspirations and needs of people, focusing on addressing inflation, trade disruption, and the debt relief for developing nations, particularly in Africa. The president also engaged members of the media and explained why the budget was not tabled yesterday. In light of the current geopolitical tensions between South Africa and the United States of America, Ramaphosa says his cabinet will continue to engage President Donald Trump. Well, we do know now that America is actually represented in this ministerial G20, but not at the highest level. With the finance track G20 ministers on the horizon, the question remains, will America be part of that one as well? From Johannesburg, South Africa, Innocent Samosa, Channels Television News.
A question there hanging in the air from Innocent Semulsa. Now we go to Zambia, where copper output has surged more than 11%, reaching over 800,000 metric tons. This is according to the finance minister. The increase marks a significant rise from more than 720,000 tons that was produced in 2023, with projections indicating production could reach between 950,000 and 1 million tons in 2025. Egypt now has successfully restarted its fish export to European Union following a 3-year suspension, and it's thanks to the country's National Food Safety Authority meeting that's meeting all necessary EU requirements. This achievement was possible after the authority received a file from the EU at the end of 2021, working diligently to set up comprehensive control system along the fish products supply chain, and the system's completion satisfied the EU's control system. And in Kenya, East Africa, that country's foreign tourist arrivals grew by 15% in 2024, reaching 2.4 million. That's up from 2.09 million. Tourism and Wildlife Cabinet Secretary Rebecca Mianu said there was a substantial increase in inbound tourism earnings, which rose by 19.8% to $452.2 billion for that country. And Malawi has entered into a government-to-government field arrangement with the United Arab Emirates aimed at addressing the country's persistent fuel shortages and reducing foreign exchange expenditures. Speaking during a meeting with a visiting UAE delegation at the office of the President and Cabinet in Lilongwe, the minister said that the deal would help Malawi cut its foreign currency spending on fuel and fertilizers, which currently amounts to about 1 trillion kwacha. That's about $575 million. Let's head to Berlin now. It's going to be a busy week for Lars and his colleagues. It's election weekend. That's it, heading into this election. And a lot of people are likely to make their choices based on the current standard of living. But while many in the world's third largest economy are doing well, an ever-increasing number seems to be having problems, not least with the cost of living. Housing is a large part of that problem. Lars joins us now to tell us what he's been hearing. Lars, I'm sure you're registered and all set to vote this weekend. That if your job would allow you, because back here in Nigeria, a lot of time, journalists, you don't have time to vote because you're covering the voters. But I wonder, how does it work with you guys? Or I'm just curious.
Well, I have actually voted already. I have made use of the system, the early voting system, because I wanted to just make sure that I won't end up working on a Sunday or so too much to a point where I would miss that, because that is just too important. But there's always ways around it.
Yeah, I know, right? Okay, so tell us about this housing situation, which is a big consideration for voters this weekend.
Yes, Ini, it is indeed, and it's really been a sad story for a long time. Basically, there is in Germany a dramatic housing shortage all across the country, and latest numbers that we just got from the government show indeed that things aren't improving at all. Looking at last year, authorities approved 215,900 residential units to be built, and that is down 17% from the previous years. Looking at single-family homes is actually 20% down, and for this year, experts expect even fewer projects to be approved. As for what is really being built right now, experts say it will likely be around 230,000 units this year, and that is a far cry from the 400,000 units that the government wanted to build to alleviate this recent crisis in the housing market. And it has gotten wild. I am, of course, Ini, as you know, reporting from Berlin, the capital of Germany, in a city with just over 3 million people, and a huge housing shortage right here on the local markets too. It is absolutely normal here that landlords receive hundreds of applications for every apartment they rent, especially if it is an affordable one, which obviously it often isn't. It's all due to higher costs for construction, you know, from materials such as steel and cement to higher labor costs, but it's also rules and regulations that are slowing things down.
So, I mean, I know politicians will be thinking of ways to solve this problem. That would be their campaign. But what are the possibilities or the possible ways of fixing it?
Well, indeed, Ini, that is the million-dollar, or actually the multi-billion-dollar question, because a full-on deregulation of the market is certainly not what anyone would want, because with not enough housing supply, rents could rise so drastically that ever more people would find themselves outpriced out of the market here. So experts have often advised the government, especially recently, to build more themselves. Don't even leave large parts of the market up to developers in the private economy. The government could indeed fund construction of 1 million apartments or so per year, is what many are saying. Now, obviously that would cost billions of euros, but it would be exactly the sort of investment the country could actually benefit from. First of all, in the long run, the government would make its money back through rental income, but they would also stabilize a sector, construction that provides millions of jobs, as well as make things easier for other industries too. Industries, for example, where we've heard that businesses are having trouble finding new talent because there's a lack of housing for them in any given location. Long story short, any massive investments in housing might be the #1 effective way for the government to support its economy. However, with the election coming up on Sunday now, just 2 days from now, there is really only one party, the left-wing Die Linke party, that is aggressively promoting this as part of their platform. The other parties have mostly ignored this particular problem, even though some recent studies have actually shown that especially young voters are more concerned about housing right now than they are now even about the climate crisis.
Well, trust politicians to always look for the most prioritized need of voters, and perhaps that will get them in. But let's look at investors now and leave some of this politics until you have to face it on Sunday.
Yes, we're looking at the markets. It's another interesting day here. Obviously, we're looking right at the election there on the latest polls and everything. We're looking at a record rally in the DAX, though, that we've seen now for months, as you know, because we covered this almost on a daily basis, how the German Standard Index just inched up every day, up 15% already for the year, and it is February. But we're also seeing the DAX weaker a little bit. It's currently up this very minute, but that was after losses yesterday. So for many, this feels a little bit like this correction could finally start that we've been talking about, that it might be about to hit us. And that's even though we're having some positive data out today. The Purchasing Managers Index is a bit stronger than expected, showing improvement for the German industry. Anyway, today is just another regular trading day. Monday, as you said too, will be very interesting because we'll have the results of the election. We can look at what government coalitions might be likely and what that might mean for the German economy going forward.
I'm certainly looking forward to that conversation on Monday, Lars. I know you'll be busy and keeping all those details for us on Monday. So I wish you the very best in your elections.
And you too. Have a nice weekend, Ini.
All right, election there in Berlin, Germany. We'll talk about it on Monday. Let's just, we have a couple of minutes just to do what's going on in the crypto space. See there, it's a green color. BTC has gained 1.3% in the last 24 hours, 98,416.47. Ethereum follows that, but XRP and I think a few of others are in the red at this time. It's still, well, this volatile market at this time, but I guess you cannot always expect any market to stay up. You expect it to move to give opportunity for other investors. Let's see headlines from the crypto space. Google says it has announced a collaboration to sign it with Bitcoin industry to improve accessibility for users and optimize Bitcoin wallets. Google aims to simplify Bitcoin access with user-friendly wallets and security development for an overall mainstream adoption, collaborating with Bitcoin to optimize that. Perhaps in the coming days you would like to try that. Now, talking about meme coins, Ladi has been talking about meme coins all through the week, almost all through the week. Kanye West has launched YZY. It's a meme coin. After losing major brand deals, is there going to be another? I mean, in this season where meme coin has led to a lot of losses and all, even Trump's have not been doing well. Let's see what will happen to Kanye West's meme coin that he has launched. Russia crypto crime surges. And the story is that because of the sanctions, there's been more activity in the crypto space in Russia, and that has led to a lot of crypto crime in recent years. The citizens are increasingly turning to crypto and continue to squeeze the nation's finances. And then also, former payroll executive at Bybit sentenced to 10 years, talking about crypto crimes there, 10 years for embezzling millions in a company funds to finance lavish lifestyle, which they said he used it to start another investment. That would have been more interesting, but there you have it. The top stories for the week, and I guess it's time to say goodbye for this week, but next week gives us a fresh start. A lot of interesting stories and conversations that will be waiting for us by next week, God's grace. But for this weekend, try and get some rest, and also go to our YouTube channel and check all that we have discussed this week. Remember, this week was decision day. We had decision day yesterday for Nigeria, and of course that's going to see what's going to happen to sentiment in different markets in the coming days. So do have a weekend that's full of rest, but also stay informed by going to our YouTube channel, Business Morning, Business Incorporated. But I won't do that until after the news at 10 tonight. I'll tell you what happens, how the market closes. Bye-bye.